Today we look at the first half of EPF's performance. As usual now, what we say should be taken as financial advice, and we do not own any shares mentioned on the slides. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Yeah, so to set the stage, this is quite an anticipated, I would say, EPF reporting because of all the withdrawals that happened last year. So everyone is, seeing whether or not it has dropped, it's going to rise, are you going to be paid less as a result? And yeah, let's get started with the numbers.
Yeah, so the investment income has been on the rise so far for the first half. I mean, you can see like the number increased by about 14% from 2022 to 2023. But then if you look past like in 2021 and 2020, right, the number didn't really increase that much also because 2021 there was a much higher investment income. If you look at in terms of quarter two itself, quarter two is just 3 months only. So you can see that the investment income almost doubled from 2022. But then it is also, I think it's the best quarter two if you compare to other years.
And to be fair also, I think the last year's Q2 has a low base effect. So, I mean, it's coming out from a lower base.
Yeah, correct. And also, I think the withdrawal, if you're talking about the withdrawal, I don't think there's any impact on it. I mean, if you look at the amount of investment income, and later I'm also going to show you the number of contributor that actually EPF managed to capture. There's actually much more as compared to last year. But before that, I just want to show you the total asset right now was about 1 trillion, 1.08 trillion.
Finally. Okay.
Yeah, as of June. And then if you don't know, about 61% is coming from domestic investment, and then the remaining 38% is foreign. But the interesting part is that the foreign investment actually generated the most income.
I see.
About 11.07 billion. Yeah, so that is something it's pretty interesting. I mean, you can see that even though they put in less money in foreign, but then
I think it's good that even for this EPF that they diversify into foreign companies or assets.
Yeah, exactly.
I think it's a better move. So I think if we look at it, right, the returns really is only about 1% for domestic.
Yeah,
if
correct.
I see correctly.
Because this one is like we are counting based on the total.
Yeah.
But then this income is just based on quarter.
Whereas the foreign one is almost close to 3%.
Yeah, exactly. So that's pretty massive. I mean, that goes to show you that maybe, I don't know, the local asset is not that giving an attractive return.
Yeah. But we understand the math, right? If you look, let's say if you add all together, really it's probably, let's call it 1.5%, maybe 2% of returns. Yeah. Yet they have to pay out, what, 5-6%?
Yeah. But this one is just quarter two only. So there's still quarter one, quarter three, quarter four. Yeah.
Okay, so then it makes sense, right?
Yeah.
8%. Yeah, okay.
Yeah, correct. Okay, so this is the breakdown. I mean, as usual, again, nothing really changed in terms of the total asset as compared to 2022's number. I mean, it's still 43% equities. They did drop a little bit on their fixed income instrument, and they add some money into money market instrument. And then so far, the equity side has been giving up the same thing, like 53%, almost half of the income. And then what's interesting about this is that the real estate and infrastructure is the one that is giving the most yield. I mean, they've just put in 7%, but they make 15% in terms of income contributed. Yeah, it still remains the best asset class that managed to give them better returns. And then others is like still pretty so-so. But in fixed income instrument actually dropped quite a bit. You see, like they dropped like the 2% only, 2% drop, which resulted like like almost 50% drop in income contribution. Yeah, so that's pretty massive. I'm not sure why is it that case. But yeah, and if you don't know, fixed income instrument is more on the government bonds and loans and all those good stuff. Okay, so this is the equities income just based on whether is it conventional or Sharia. So 90% of it obviously is from conventional and only 1.76.
This is for the
10%.
quarter.
Yes, correct, for that particular quarter. is coming from Simpanan Syariah.
Okay.
Write-downs. So people expect that the write-downs actually reduce a lot, but if you compare between 2021 and 2020's number,
There's nothing.
actually, yeah, it's actually really
Maybe
nothing.
even if you prorate it, it's only about R1 billion.
Yes, exactly. So initially people think that it's a positive thing that the write-down is reducing, means there are not really a lot of asset is not being sold at a loss.
Mm-hmm.
But then if you compare between 2021 2020, I mean, maybe you kind of expect in 2024 the write-down will be increased.
Yeah.
Who knows, right? But yeah, so that's just the write-down. And the reason why their investment income actually managed to increase by 14% year on year is because there is a increase in terms of total contributions received. So
Interesting.
yeah, there's more people putting in money into EPF so to speak. And
Yeah, actually, I mean, some fun math, right? This is just the first quarter. So let's say, we prorate about 100 billion ringgit. 100 million ringgit.
Yeah.
This million, right?
Yeah, correct.
So
billion.
Oh, this billion. Okay.
Yeah, billion.
So at 100 billion ringgit of EPF contributed, let's say you take a blended average of just per figure 12.5%, right? Because some companies pay a bit more than 11%. Right. So you're looking at a times 8. So 100 billion times 8 is what? 800. 800 billion ringgit.
Yeah.
Right? So that's about, if my math's correct, that's about
10.
slightly above half of our GDP. So our GDP is about 400 billion US dollars. So 100 billion ringgit, roughly 170, 180 billion US dollars. So it's about half of our GDP. Very interesting.
Yeah, that's pretty okay. So our money, the what is running our country is basically EPF.
Half. Then the other half is corporations.
It's pretty interesting. Okay, so members, so far there's about 15.9 million total members. I didn't really get the data from the previous year. This is the number that I got only. And then there's about 16.86 million of total active workforce. So we are pretty much almost gapping the entire, capturing every single workers that contributes money into EPF already. Pretty much already. And then right now for first half 2023, there's about 8.47 million active members. Active member means you at least contributed money to EPF within the last 12 months. And then there's about 8 million last year. So there's a increase about 470,000.
I'm not among that, but okay.
Yeah. And then another thing that is interesting is that they actually increase the average voluntary saving. So not only the numbers of contributors increase, the total contribution also increase. So you can see that.
Oh, I mean, the average amount of money that people put inside, like in addition to.
Correct.
See,
they put inside money.
So that means if that's the case, means that the income is probably a bit lower than that 170, 180.
Yeah, it could be because
put on more.
Yes, correct. It could be also because of that case.
So this is what throughout the half.
Yeah, first half.
Okay, so
first 6 months.
Roughly 15K people add into it. Interesting. I never anticipate that. I never think that people actually add on more than what their income put, the 11%.
Yeah.
Okay. Do you know a lot of people who?
Not really also, because EPF, one thing is that from my family side of things, they rather want to put in FD because it's flexible to withdraw. Yeah. So I mean, they still contribute in EPF, but they didn't put like beyond what
okay. Yeah. So that's why I'm also a bit surprised that people actually put quite a bit.
Okay, so this is just the final comments. One thing is that because we see that their foreign investment income is making a lot of money, so maybe there's like plenty of opportunities outside, better than domestic. And then from the write-downs, historically, you can see that once the write-downs drop, the next quarter they increase like about 1 to 2 billion. So maybe you will see more write-downs in quarter 2 2024. We may never know. Who knows? Maybe the market bull runs. I don't know also. And then another thing is that you can see based on the number of contributors, I mean, that kind of shows the popularity of EPF is going up, which is also good also because, I mean, that's your retirement fund so to speak.
Pretty much. Yeah. I mean, this is one of those news that is generally positive, but you know, we will never get the likes and the traffic.
Yes, exactly.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. Okay, so I think the next part is foreign holdings. This is a big topic in Malaysia most of the time because, I'll explain this way. So a lot of our big funds are fully invested. Right, as you can see, for 3% of bonds, there's 3% of cash, the money market.
Yes.
That's just EPF. I'm sure, your ASBs and your Tabung Hajis of this world will also have something similar. Right. Yeah. Now, the key thing here is, in order for the stock market to grow as a whole, typically is when foreigners come in to invest. Case in point, in the 90s, Malaysia stock market was very hot.
Yep.
I think at one point, I could be wrong on this, but at one point we were something like close to 15%, 20% of the MSCI Asia index, Malaysia alone. So when they're in the index, it means that foreigners will then be more open to buying and things like that, right? So obviously as time passed, that has dwindled, and that's also why you can see, especially since starting from the second half of Najib's time all the way until now, it's pretty flat. And a lot of it is because foreign holdings are, question mark. And then you look at the politics and all that.
Yeah.
That people are wondering. Exactly. So, and of course, we just had the election, and it'll be interesting to see what has happened as far as foreign holdings is concerned.
Yes. Okay. So number one, they are in because of the bonds. Yeah. So surprise. So they bonds. They pump in a lot of money, about 12.7 billion into Malaysian debt. And only like 1.4 billion into the equities. I mean, it's still money coming in. It's not going out of our Malaysian market. And then you can see that this is their breakdown of what they are actually buying. You can see that it is actually they bought more of these Malaysian government securities.
NGS,
so they add 7.6 billion. And then the government investment issues, they add 1.8. And then the remaining 1 billion is for the private debt equities. And then also, basically, they have been buying these government bonds for quite some time already, since 2020, if I'm not mistaken. If I can recall correctly, I think it's around like July 2020. Yeah. So June 2020. So they have been buying a lot of these bonds, and now they represent about 24% of the government bond outstanding.
Foreigners own a quarter of Malaysian bonds.
Yes,
government
correct.
bonds.
Yes, correct. So yeah, this is the chart that you can see that I got it from Don't Mind Please by Mr. Chong Kwat Song. So thank you for making this chart. But so you can see that the number of bonds that actually is being purchased by foreigners is actually increasing. So initially they hold about 22%. Now it's up another 2%. So you can see the graph is actually going up, trending up. Then so this is just a record high for the foreigners buying the 10-year trend of Malaysian ringgit debt securities. So everything is always is already going up already. So you can see the total government bond is going up. NGS also is going up. This one is the GIIS. Yeah. This one is the GIIS. Yeah.
I think this signals the faith, I guess, of some of these foreigners that they have on the Malaysian government's ability to pay. So I don't know what to make of this, because I'm not sure if the government, I guess they're maybe a bit positive that the existing government has indicated, hey guys, we cannot simply spend. I mean, that's the basic message. The Madani government.
Yes.
So that's probably contributing to why they would add in a little bit more money, especially when before you had all this infrastructure spending that, there was a question mark.
Yeah, correct. So yeah, that's actually pretty interesting times that people have put in a lot of faith in Malaysia. So if you didn't know about the yield, this is what is the yield is currently. It's about 3.8%.
On the bond, the MGS, right?
Yes, correct. On the MGS. And then also it's about 3.87 for the GII. So it's like pretty much
which is
similar.
Islamic, right?
Yeah. This is the 10-year bonds. So you can see as the years goes shorter and shorter, the yield also goes lower. Okay, so that's the bond side. They are buying a lot. And then you notice that they also bought in like 1-something billion in terms of equities. So you can see this is the foreign shareholding in the listed companies in Malaysia. So right now, they are sitting at about 19.7% in terms of the total participation in the stock market, which is almost, I would say it's almost at the bottom, because we have a bottom in 1990 to 2003. I think that's where the dot-com bubble. Yeah, 2000 dot-com bubble. That's why they kind of reduced a lot. But then we are kind of like hitting a bottom already for foreign shareholdings.
A bottom relative to what?
bottom relative if you see like from other years, like for example 2008 crisis.
I see.
I mean, we're even lower than the 2008 crisis. Yeah, it's a new low lah. So we shall see whether would they start to put in money because the liquidity for foreign investors kind of like dry up already.
Yep.
So, but what's interesting is that in the past few months, they actually bought before the election. Yeah. So you can see there's a huge amount of inflow right before August 12th. Okay. Yeah. So that kind of signals that maybe they are seeing there is some sort of political stability, or maybe the valuation in Bursa Malaysia has come to an attractive price point. So that's why they enter. Okay, so this is what happened after they bought in before the election. So you can see these blue chip stocks start to rise a lot. So this is actually gained since early June until August 16. So in just a span of like less than 1 month actually, like 28 days or something. So you can see Genting is actually up 23.2%, which is surprising. I didn't even notice that. And then also Genting Malaysia is up. So basically they are kind of showing that they are very positive in the tourism sector.
Right.
And then the rest, like the utilities and banks, they kind of like have stake in it. Oh, and another one is Dialog also, which is another blue chip stock that they own. Okay, so not only the foreigners, we have this fund manager, which is Aberdeen.
Yep.
They also have been buying actively in the Bursa stock. I mean, number one is Kosan. They actually put in quite a huge amount of money, about 41 million. So that's the number one stake in terms of their Malaysian portfolio.
Yeah.
And another thing that actually they went in is FarmFresh. So if you didn't know, FarmFresh actually share price tanked. Yeah, when Australia. So that's where they actually came in as a substantial shareholder. So they put in about 25 million. And yeah, and it's like just in a span of like a few days only, then they became a substantial shareholder. So that's pretty interesting that foreigners, fund managers are starting to see some, some good deals in the Malaysia stock market. Okay, so this is the final comment. I think there's always like a reverse effect, right? When there's like more demand for bond, does that make the stock more attractive? I mean, because when more demand for bond, then the bond price will increase, bond yield will decrease, which means the interest rate, maybe they kind of expect to kind of like slow down a little bit. Yeah, so which makes maybe stock interesting at the moment. And also they are buying before election, which kind of signals that maybe they expect some sort of political stability. That's why they're coming in again. And the last comment, this is just my personal opinion, but maybe Bursa stocks have bottomed. Not all stocks, but some stocks. Or just in general already that the market has bottomed, because we are seeing so long that the foreign investor has been pulling out from Malaysia stock market scene. Right. Now maybe we shall see some sort of recovery. But yeah, what's your take on this?
No, I mean not too much to add. More just surprises. Why they will go into bonds, rather than equities.
Yeah.
I mean, it just tells me that they trust the government more than corporate Malaysia in that sense.
Yeah.
Anyway, guys, thanks for staying all the way until the end. But before we go, we would like to talk about FIRL Pro. I think if you follow us, we've been talking about this for quite a while. The performance you see on the right for the companies covered in FIRL Pro has been doing pretty decent, almost 20% in a year.
Yeah.
We hope to continue this. And if you want to know what's inside, well, you can check out the free sample section in the comments or the description. Essentially, they are reports, very easy to read, jargon minimalist reports. 15 minutes, and you'll be pretty much done with the report. And and if you're not sure whether this is for you, you can do two things. One, you can either check out a free sample, again, totally free, or if you really want to see the whole thing, you can make a purchase. And within 10 days, if you don't like what you see, that's totally fine. Just send us an email and we will send you a refund. And guys, as usual, thanks for the support, and I hope to see you in the next video.